Talk about the IT sector. Now, HSBC has come out with an interesting note where they're talking about how mid-cap IT was the big, outperformed the large-cap IT space ever since COVID struck. Their growth rates were higher. But now what HSBC is observing is that the growth differential between mid-cap and large-cap IT, which was as high as 10% in the aftermath of COVID, has come down. And according to HSBC, it will settle between 4 to 6%. So mid-cap IT will continue to outperform large-cap IT in terms of growth rates. Their base is small, but the extent of outperformance, according to HSBC, will moderate. Also, on mid-cap IT, HSBC has noted that the operational performance has been a bit of a negative surprise. So, mid-cap IT companies have won a lot of cost rationalization, margin dilutive deals, and therefore the margin performance has been a bit of a negative surprise. Also bear in mind that valuations of mid-cap IT companies are now at a 50% premium to large-cap IT companies given, the stronger performance, but it's much higher than the historical premium that mid-cap IT enjoyed. That said, while this is on one side, on the other hand, mid-cap IT's cash conversion cycle has, been pretty strong and has only improved. Now, particularly on KPIT Tech, HSBC has downgraded KPIT Tech. And remember, KPIT Tech was the star in the entire mid-cap IT space. Now, the reason for this downgrade to hold is they're noting that R&D spends of automotive companies has come down. This is according to HSBC. They go on to give their estimates up to FY27, FY28, but just as a comparison of what's expected this year versus what it was about 4 or 5 years back, you would see that R&D spend as a percentage of revenues for large OEMs is coming down. So that's reason number one that HSBC cites. They go on to say that yes, KPIT will try and diversify into Asian clients, US clients, but there still could be a downside risk to their growth. Also, competition from peers, because automotive ER&D has been so strong, is now intensifying from the likes of LTTS, Tata Tech, Infosys, Cognizant. And therefore, HSBC is saying that KPIT's growth rates will come down. The last 3-year average growth rate has been 34%, and that could come down to 15% going ahead. So they prefer an LTTS over, say, a KPIT Tech, because now that KPIT Tech is fully dependent on automotive OEMs, LTTS, that's L&T Technologies Services, also an ER&D player, but it has a diversified revenue base, and therefore their preference is for LTTS over KPIT Tech. There is a downgrade on KPIT Tech. On LTTS, they continue to maintain a hold, though they've gone ahead and raised the target price marginally to 5,560, marginal upside from current levels.
Okay, so that explains, the buzz around some of those stocks on the IT side of things. Well.